Hey guys, TommyBryson here, and what exactly is an HSA account? And by the way guys, the older I get, the more I realize that basically insurance is going to be more and more important, and also insurance is very, very expensive, right? And overall, I'm always looking for ways to save money on taxes, so this is also an amazing way to actually do it. And the whole idea is, in this video, I'll tell you exactly how an HSA account actually works, how to open one, how to invest with one, and all the details that you actually need to know about an HSA account. Now, if you guys are new here, I post videos every single day, so you should also subscribe and hit the bell to get notified, and top of that, also destroying the like button. Now, the very first thing is this, guys. Tell me, what exactly is an HSA? Well, it stands for Health Savings Accounts, but it also works also as an investment account. And it's basically for people that have a very high deductible health plan. Meaning, hey, you know what? I basically save a lot of money in premiums, but if something happens to me, I'm gonna have to go out of pocket by a lot of money. So I need money there. So an HSA was created for those people. So that way they can have money there in case anything goes wrong. So overall, in order to qualify for an HSA, you have to have a qualified, high deductible health plan. Meaning this plan is going to have low premiums, right? But you are going to be signed on to say, hey, I am willing to, as a customer, to pay more money out of pocket if anything does go wrong. Which for some people is going to be a lot of money, very expensive, but if you're going to be healthy and they're going to be fine over time, in reality, it's going to save you a lot of money over time in premiums also. And even if you're not healthy, well, it's way better to pay out of pocket if you have the money that, well, not for everything, obviously, right? It's a cap, maybe like 2,000, 5,000, sometimes even 10,000. But the answer is better to do that than to go out there and pay, for example, hundreds of dollars every single month in crazy high premiums. And by the way, the reason when you have high deductibles, insurance premiums are going to be cheaper is because you are saying, hey, if something goes wrong with me, I'm willing to go ahead and pay more money out of pocket. Thus, the insurance is going to charge you less money when it comes to premiums. However, if you're not willing to go out of pocket by a lot of money, well, they're going to charge you a lot of money in premiums every single month, which is going to cost you hundreds, well, maybe tens of thousands of dollars over a lifetime of actually having insurance. Now, I do want to give you guys a tip, okay? Overall, the money you put into an HSA account, okay, every single dollar of it is supposed to be for medical expenses, not premiums, but basically for things involving medical and health problems, okay? That's the whole idea. So co-pays, or you went to a dentist appointment, or you have to pay the difference, whatever it is, okay? But it has to be medical. Now, before we even continue here, if you try to take this money out and use it for non-medical purposes, what exactly is going to happen here? The answer is, well, they're going to charge you taxes, obviously, okay, ordinary taxes, a lot of money. And on top of that, they're also going to give you a penalty of around 20%. So obviously, I do not recommend you put money in here and then go ahead and take it out, because basically you're going to get penalized like crazy. Taxes, 20, 30%, and then also a 20% basically penalty. You're going to walk away with less than 50% of the money you actually had in there, okay? So keep that money in there just for medical issues. That's the whole point. Do not take this money out for any other reason. Now, Tommy, what are going to be the benefits of me actually using an HSA account, okay? Well, the first benefit is obviously, guys, you're going to have security. If you want to save money over time on premiums, which basically everyone does also, it's way better to put it in here, have this money grow tax-free also. But on top of that, you're going to have security, because basically, if something does go wrong, you have that money there to go ahead and use it. This way, you're covered, right? You don't want to wait until something happens and be like, okay, I don't have money now, get a loan, do something else, credit card. No. The answer is, if the money is there, secured, and you can't take it out because basically you have a very big reason not to take it out, penalties and taxes, the answer is this money's going to be there to take care of you when things go wrong. On top of that, an HSA account is going to be a pre-tax investment account, or for example, savings accounts, meaning you can go ahead and invest your money or save it pre-tax before you actually get taxed on it. So if you make 100K and you invest, for example, 3K or 5K, that money is not going to be taxed. That money is also going to grow tax-free. That's the whole idea there. So on top of it saving you money in premiums, it also saves you money in taxes. So basically, everything I love in one, saving money and also avoiding taxes. Legally, of course, okay? That's the whole idea there. On top of that, I do want to remind you guys basically that, remember, okay, this is just an account, right? So when you put your money inside that account, if you don't invest it and pick your investments, it's not going to do anything. The money is just going to be there, not invested, okay? So I don't want you to make the mistake saying, hey, I sent money over to my HSA, it's being invested, but in reality, it's not. You still have to go in the account and select your investments and then have that money actually grow. Money you put in there, you don't select investments, it's not going to be invested. Remember that, okay, guys? You have to literally go in the account and select your investments, okay? So don't forget about that. I know this story about this lady. She had a Roth IRA, okay? Kind of like the same thing, but not really. Had a Roth IRA, and she sent money into that account for 10 years. After 10 years, she was like, why is my money not growing? Because guess what? She never selected any investments. The money was just sitting there, and over 10 years, she could have made a fortune, but in reality did not, because basically she did not select investments. Same here with a health savings account, okay? Keep that in mind. Now, last thing, contribution limits. Tommy, how much money can I put into this account? The answer is, if you are single, $3,600 annually. If you are a family, $7,200 as of 2021, meaning that can save you a ton of money in taxes every single year, and that money can then go ahead and grow tax-free for you. Now, meaning if you're, for example, a healthy person and you are investing $3,600 every single year over a 20-year period, well, in reality, in the next 20 years, you're gonna have around $226,000 in that account. That's how crazy this actually is. But on top of that, if something does go wrong, that money is going to be there to take care of you. And on top of that, over the next 20 years, you're going to be saving thousands of dollars on premiums when it comes to insurance. Tommy, I don't care about this. I do, because basically, as I get older, insurance is more and more important. And by the way, you're a person, you're human, so your body at some point, if given the chance, is going to mess up or get sluggy. So you gotta be able to have money there to take care of yourself and your body in the future. No body, no you, no nothing, no you, no money. So health is always gonna be more important, okay? So keep that in mind. Health is wealth. Health is wealth. Now, I do want to say this, guys, okay? For everyone that might say, Tommy, well, this sounds like a good thing. By the way, the way to get this is basically, you have to talk to your employer, talk about basically a qualified, high deductible health plan, right? You have to talk about that stuff with your employer. But overall, remember this, guys. You might say, Tommy, well, if I'm going to be a sick person and I'm going to have a lot of problems, well, does this make sense for me? The answer is, if you start early and you have money inside there, the answer is yes, because in reality, you're going to avoid paying all that money in higher premiums. And when things do go wrong, because eventually they might and probably will, you will have money in there to cover things. So imagine having, for example, a $100,000 medical bill, but your deductible limit is only, for example, $5K or $10K. Usually not $10K, it might be like $5K or $3,000, right? So if you have that money there, you can go ahead and say, hey, here's this, okay? You spend $3K or $5K, but the actual bill was over $100K without insurance, and the insurance is to cover the rest of it. So it's not like, hey, deductible, so much money. Well, it is a lot of money, but if you have money there and you've been investing for a while, by the way, I recommend everyone go ahead and max out this account. It's tax-free, it's saving you money, and it also gives you security for the future. This way, if things do go wrong, that money is there to take care of you. But if you do have, for example, medical issues, and you're paying, for example, crazy premiums, that's going to be a massive issue in the future, right? Because what happens if you can't work anymore, but you still have those premiums, right? It's going to be a massive, massive problem. So keep it in mind. And I don't want you to be, for example, one of the people that falls victim to crazy medical bills. Because by the way, guys, bankruptcies, okay? One of the big reasons for bankruptcies is going to be medical bills. People go bankrupt usually because of medical bills, because basically medical bills are very, very expensive. But if you have a cap on how much you pay, the answer is this can be very, very helpful. And overall, remember, okay, to qualify, you need to have a high deductible health plan, okay? Talk to your employer to see if one is available. On top of that, make sure you max this out. It's going to save you money on taxes. Also, make sure you don't take this money out for anything else. You're going to be taxed and penalized like crazy. So I highly recommend, if you're going to open up an HSA account, like I am about to, the answer is make sure you are, for example, investing into your Roth. Make sure you're also, for example, having an emergency account. So when things go wrong outside of medical things, you have money there so you don't have to basically use any of this stuff. And make sure you're maxing it out every single year. This way, in the end, you have money there to take care of you. That's the overall idea. The worst thing is having a $40,000 or $50K bill and not knowing what the heck to do. You need health insurance. 100%, keep that in mind. And guys, comment down below and let me know, because you guys know I'm gonna also get an HSA plan. Let me know if you want me to make a video on which plan is the best after I do all the research and actually select one for myself. Comment down below if you want to see that video. Comment down below, let me know. I'll see you guys next time. Thanks for watching, and as always, like, subscribe, hit the bell to get notified. And on top, if you want to text me or talk to me one-on-one, join my Patreon, link down below, or send me a DM on Instagram at TommyBryson. And before I go, if you want to watch another video, here's a video right here, and click my face right here. See you guys tomorrow, and as always,